Hello and welcome to Business Daily. I'm Lee Ji-eun in Seoul. We have a lot lined up for you today, so let's get started with a glimpse of the day's highlights. The southern city of Geoje, home to the main docks of Korea's leading shipbuilders, is already seeing the ramifications of Korea's ongoing restructuring efforts. We have a special report. Is the gloom for oil finally over? Oil prices have rallied since the start of this week, and there are hopes that the rise in prices might give the global economy a shot in the arm. We sit down with an expert to talk about this. The Korean government and the central bank sat down together for their second meeting on how to support state banks that will have to make up for losses incurred from corporate restructuring. Our Hwang Jae starts us off.
Korean policymakers have once again emphasized the need to consider all measures as the country looks for ways to expand the capital base of state banks to preempt financial instability that could be triggered in the process of corporate restructuring.
We have reviewed both options of directly injecting cash into the state banks and indirectly supporting them by setting up a fund so that we can respond with greater flexibility to the situation.
This came during the second task force meeting involving the Finance Ministry, the Bank of Korea, and other related agencies, and experts say this indicates the government is moving to prevent bigger losses.
Loss sharing is the key issue of corporate restructuring. Restructuring of General Motors ended up involving state money, in other words, taxes. And that's because the negative impact on the overall economy of that company going bankrupt would have been too huge.
The central bank has remained rather reserved about using its authority to print money and give out cash to state banks, as it's a decision that can affect the overall livelihoods of the Korean public. But the government has been adding pressure on the central bank to do so, as using the state budget would take longer due to the parliamentary approval process. While the question lingers on whether there is enough social consensus about pouring cash into the ailing shipbuilding and shipping industries, the policymakers did make clear that the principle of corporate restructuring remains on minimizing the burden on the public. And this was echoed in Finance Minister Yoo Il-ho's comments earlier in the day that it should be the creditors that lead the overhaul and that the government will monitor the restructuring based on the rule that related parties should strictly share the losses. Hwang Jae, Business Daily.
And the minister also said Hyundai Merchant Marine will face court receivership if the shipping company fails to secure a substantial cut in charter fees in ongoing negotiations. After a meeting with economy-related ministers on Thursday, Yoo Il-ho said the government would wait and see what the ship owners and Hyundai come up with as the talks are ongoing. On Wednesday, the shipper, its creditors, and its ship owners met with the goal of slashing charter rates, but failed to reach an agreement. The government, which runs the company's main creditor, Korea Development Bank, has set a Friday deadline for concluding the negotiations. And it's not just shippers, but shipbuilders that are in rough waters. We turn to the ongoing struggle in this sector as the government wrestles with restructuring. The local communities surrounding shipbuilders and the workers themselves have been hard hit with the reality that they face. We look at these hardships in two-part series with our Shin Se-min, who reports from Geoje City, located in the southern coast of Gyeongsang-namdo Province.
It used to be a city, proud to be called the home of leading shipbuilders, but now it's slowly losing its vibrance. Geoje is known as the base of two of Korea's big three shipbuilders, Daewoo Marine and Shipbuilding and Samsung Heavy Industries, which were part of a pack that once controlled nearly 70% of the world's market share. But now, the entire shipbuilding industry is faced with an inevitable fate of downsizing, owing to slumping oil prices and slowing global demand. The leading shipbuilders racked up collective losses of nearly $7.5 billion last year, and new orders slumped to their lowest levels in 11 years in February. Making matters worse, the spillover is starting to directly affect the local economy. Neighboring shops and restaurants that largely cater to workers from the industry are starting to close shop due to a steep slide in business.
Sales have dropped by 1/3 in the first quarter of this year compared to the previous quarter. I no longer see men and women in uniforms hanging out after work.
The property market is no different. Contrary to a bump of nearly 2% seen in Korea's overall housing market, prices in Geoje have gone down by 1%. In the recent months, the rental fees of studios near Daewoo shipping have dropped by 30%. On the labor front, the situation is much worse. Shipbuilders in the city are expected to cut back as many as 20,000 employees this year from their 90,000-strong workforce. Although restructuring is considered a much-needed move to salvage the industry from its rut, a former worker of one of the leading shipbuilding firms says things are not that simple from the eyes of employees.
Many of my former colleagues have already left their workplaces, and it's not easy finding an alternative job, especially given the short amount of time we had and the fact that we were high-paid workers.
Experts worry that losing large groups of employees with high wages in the process of corporate restructuring will result in a drop in household spending, thereby putting the health of the local economy at greater risk. Shin Se-min, Business Daily, Geoje.
Korea's producer prices rose for the first time in 11 months in April on the back of a recent pickup in oil prices. The Bank of Korea says prices edged up 0.2% last month from the previous one. Prices of industrial products like petrochemical goods and steel products led the rise, increasing 0.2%. The price of Dubai crude, Korea's benchmark, rose over 10% in April compared to a month earlier. From a year earlier, though, producer prices were actually down about 3%. The CEO of renowned Nissan, Carlos Ghosn, is to be named in a class action lawsuit that accuses Nissan of cheating on emissions tests for its Qashqai SUVs. Reports say law firm Paden Law has secured some 30 owners of the Qashqai in Korea and will file the lawsuit next week at the Seoul Central District Prosecutor's Office. The law firm explained that it chose to sue Ghosn along with the head of Nissan Korea because it believed the responsibility extended to the headquarters of the Auto Alliance. On Monday, Korea's Environment Ministry had said that it will halt sales of the Nissan SUV and issue a $280,000 fine for manipulating emissions test results using a defeat device, a charge that Nissan Korea has denied. 817 Qashqai SUVs were sold in the country between November and last Wednesday. There are now higher chances that we might see a rate hike in the U.S. next month. The Federal Reserve's minutes released on Wednesday showed that the Fed might raise interest rates in June if economic data turns out to be positive. Most policymakers judge that if incoming data are consistent with economic growth picking up in the second quarter, labor markets continue to strengthen and inflation makes progress towards the Fed's 2% target, then it would be appropriate to raise rates next month. With numbers out of the labor market steadily improving, the Fed believes this serves as an indicator that economic activity in the U.S. has not worsened. After trading as low as $27 a barrel in mid-February, the price of West Texas Intermediate is now closing in near $50 a barrel. What's driving the rebound in oil prices? Let's find out.
U.S. oil settled 12 cents lower at $48.19 a barrel on Wednesday as the dollar surged following the release of the Federal Reserve's April minutes that hinted at the possibility of a rate hike in June. But still, prices are up about 80% from their 12-year lows of around $27 for Brent crude in January and $26 for WTI in February. The latest rise comes amid declining U.S. crude output and a wildfire that has put a dent in oil exports from Canada, as well as supply outages in Libya and Nigeria. And thanks to the rebound in prices, U.S. manufacturing production rose in April for the first time in 3 months, while consumer prices also rose at the fastest pace in more than 3 years. Will this lift provide some light at the end of the tunnel for the sluggish global economy? We'll get a closer look.
And to tell us more about this, Professor Kim Se-wan from Ewha Women's University joins us in the studio today. So good to see you, Professor.
Pleasure to be here.
All right, so first and foremost, what is the biggest reason behind this latest surge in oil prices?
Well, recent oil price increase has been mostly affected by supply-side factors. We had several supply-side factors like forest fires in Canada, oil production region, and some military conflicts in Nigeria. And even United States decreased their oil production marginally. So altogether, these decreased oil production up to 2 million barrels per day, which is about 3% of the total production.
But then oil prices continue to drop all throughout last year, and analysts even pointed to how this plunging oil prices is threatening the global economy. So what kind of trend have we seen from the beginning of this year up until now in global oil prices?
Well, as we know now, the oil price has a huge drop from 2014, from $100 per barrel to $30 per barrel. So
Wow.
at the beginning of this year until February, the price of the oil has been stayed around $30 per barrel. But after that, it steadily increased up to $50 per barrel in May.
All right, then we've also heard that the magic number in the oil industry is 50 US dollars. Can you tell us more about that?
Well, we have kind of academic stories about it. So it is interpreted as something psychological resistant level between oil market participants. That means there are two distinct regions in oil market, above $50 per barrel and below $50 per barrel. So when oil price is about $50 per barrel, lower oil price increases economic growth. However, on the side of the below $50 per barrel, lower oil price decreases economic growth.
Going along with that, in your opinion, what is the optimum price for oil? I mean, can there be such a thing?
Well, we have two different views on optimal oil price. A demand side and supply side.
Okay.
On the demand side, the optimal oil price is mostly determined by global economic status. So when economic growth rate was the highest in recent history, in the late 1990s, for example, the oil price was $25 per barrel. That is, in today's price level, that is about $50 per barrel. But for the production size, we have to take a look at production cost of the oil. But there are huge differences in production cost of the oil between oil producing countries. For the case of the Middle East countries and Russia, the oil production cost is below $20 per barrel.
All right.
But for the case of the United States shale oil producers, it is about $70 per barrel.
Okay.
So rationally, the optimal price should be about the $50 per barrel.
Oh, okay. So what kind of impact has the latest rise in oil prices had on the U.S. economy as well as the global economy as a whole?
Well, higher oil price is, of course, good news for energy companies. And the energy companies covers almost over 10% of the U.S. GDP. So that is a good story about the U.S. economy. When oil price is below $50 per barrel, but it exceeds $50 per barrel, that has a negative effects on global economic growth.
Then will this trend continue?
Well, it is hard to tell. It is very hard to forecast the changes of the oil prices. But general expectation is the oil price will be increased above the 50%. But then U.S. oil producers, particularly shale oil producers, will increase their production in a large scale. But that more production and more supply of the oil will interrupt continuous oil price increases.
Now, the OPEC summit is also scheduled to be held next month. Until that summit, what are some major factors that could, I guess, in the global economy that could influence oil prices?
Well, the April's OECD meeting, OPEC meeting, really disappointed oil producing countries because they failed to cut the oil production. So given that, the expectations or possibilities of the oil production cut in the June's meeting will affect the oil price until then.
All right, and also Goldman Sachs expects oil prices to actually rise to $51 a barrel in the fourth quarter of this year before climbing to $60 a barrel in the fourth quarter of next year. So in your opinion, what's your forecast on oil prices from here on out?
Well,
do you agree with them? And with Goldman Sachs?
I kind of partially agree with Goldman Sachs forecast.
You do? Okay.
Goldman Sachs forecast is most cited forecast between forecasters, and however, they are not correct all the time. For example, they did not expected 2014's huge drops of the oil price. But I partially agree with Goldman Sachs forecast because if a global economy recovers faster than expected, there will be a possibility that oil price exceed $60 per barrel.
And like we heard in the report, what about the U.S. rate hike? How would that play into all this?
Well, U.S. rate hike is related to the appreciation of the U.S. dollars. So when U.S. dollars is appreciated, there will be less demand for oils all over the world. So that has a negative impact on oil demand.
We'll definitely keep an eye on that as well next month. Thank you so much for coming in today, Professor.
Thank you very much.
And that does it for today, but we'll be back tomorrow at the same time, same place for your Business Daily. So don't forget to tune in then. Thanks for watching and see you soon.